What's up guys, Kevin Cage here with another crypto update. Hope everybody's doing well, and we're going to dive into some big news today. We're also going to discuss the importance of liquidity and very high trade volume, which typically can lead to very large price moves. Let's get into it. First up, I saw Jeremy Hogan share this Forbes article, and check this out. They say verbatim, now, a former BlackRock managing director has predicted it's only a matter of months until the SEC approves the long-awaited Bitcoin Spot ETF, giving these funds that manage over $17 trillion worth of assets the green light. So we know that BlackRock alone, with over $10 trillion assets under management, is one of the largest custodians in the world. The only two countries that have a higher GDP than BlackRock are China and the US, so BlackRock is essentially a massive country. In taking a look at the top 10 wealthiest nations, BlackRock is ranked number 3 above these other countries, including Japan, Germany, India, UK, France, Canada, Russia, and Italy. Talking about BlackRock potentially being huge for crypto, $17 trillion Wall Street earthquake that could be about to hit the price of Bitcoin, Ethereum, and XRP, naming some of the top 5 assets by market cap to get a lot of views and engagement. Now, some people are super excited for some of the world's biggest custodians and banks to actually have a spot ETF and get involved in the crypto market more and potentially provide a boatload of trading volume and a lot more liquidity. So for a Bitcoin spot ETF, BlackRock would actually need to purchase and hold actual Bitcoin as the underlying asset, which could be a big thing. Now, I know other people are worried about manipulation and even shorting the ETF if, one client or BlackRock or some powerful person holds a lot, they want to sell it on the open market and buy back lower. That's always possible, and people are worried about manipulation, but markets are already manipulated today. So we know BlackRock was accumulating Bitcoin during the lows around 15K or under 20K. So could, in theory, BlackRock or other powerful whales like usual manipulate the market and try to crash prices again to say 10K to buy back, improve their position, accumulate even more, and then during the bull run make a lot more money and hype Bitcoin, market crypto to everybody, and use liquidity to stagger out and sell as Bitcoin creates a new all-time high price. Anything is possible in crypto, in this bear market specifically, with all of the black swan events and crashes of hedge funds, crashes of lending platforms, regulatory enforcement to exchanges. I'm never going to say never, and this bear market has reminded me that anything is possible, so I can't turn a blind eye to it. But at the end of the day, with all of these global banks creating crypto trading desks, getting into crypto custody, and starting DeFi solutions, a spot ETF for Bitcoin, along with even other alts in the future, is just a matter of time. And I'm a big believer that the crypto asset class returns to multiple trillions of dollars in market cap in the future. And I encourage you guys to stay cynical whenever you see these articles put out by Forbes and other major custodians like BlackRock, the world's largest, because there's typically always a vested interest. As we're getting closer to the Bitcoin halving, just like we've seen for the past 10 years, typically leading to a very nice bull run, each time leading to a new all-time high price, I believe there's going to be a huge recovery in the market in the future, and I'm going to wait it out as long as it takes. Now, could we play around between 20 to 30K for Bitcoin a little longer before the halving? Yes. Could we create another low? In theory, yes. But I believe overall, the Bitcoin price chart and a variety of crypto assets specifically sitting at all-time low prices are going to recover when volume returns to the market. When buy volume returns to the market, just like we've seen over the last 3 cycles over the past 10 years. So if they're saying a matter of months, whether it's 2 months or 6 months, it's getting closer to that halving date, which is in April of 2024. And the large shareholders of BlackRock include Vanguard. Vanguard owns a variety of media companies, some of the world's largest organizations in almost every single sector. We have State Street, you have Bank of America, and a lot of large organizations. Now, this is super important. I want to point out the difference of today in the bear market versus what we've seen in previous bull cycles and discuss the difference between the 24-hour trading volume. So we know Cardano, as a high cap, it's a great example of an asset absolutely exploding, doing well over a 100x from its March 2020 low to the bull run top over $3 in 2021. And even during the bull run, before even reaching $3 plus at $1.30, Cardano's 24-hour trade volume based on CoinMarketCap was $15.7 billion. So $15.7 billion, and today's trading volume on CoinMarketCap using the same website is 106 million. Meaning that the volume for Cardano alone during the bull run at 15.7 billion versus 100 million is 147x times higher. So that's absolutely nuts. You can go through a variety of assets, look at their all-time high volume and compare, and you might not see a 147x difference. Maybe you'll see a 5x, 10x, or 50x difference, but it's substantial for so many assets. And CoinMarketCap might not be the most accurate for volume metrics specifically because there's things like wash trading and some of these figures aren't accurate, but we're using the same website to compare today to the previous cycle. So even today, looking at the 24-hour trade volume for a variety of assets in the top 10, top 50, etc., during a bull run, these are up orders of magnitude higher. And you can see today, we basically have no trade volume, it's sitting at a low, and historically, we do get those large green candles every few months or every several years, typically resulting with back-to-back large green candles during a bullish cycle into new all-time highs. And the same thing, looking at the momentum and just looking at the RSI. So this is Bitcoin on the monthly time frame. You can see bottoming out and then boom, going into overbought, absolutely exploding in the new all-time high prices. Coming into another bear market, forming another cup for a couple of years, and then exploding again into a new all-time high price all over again. Coming back into a bear market, got more of a retracement last cycle with the RSI and price action, and even the altcoin market last cycle performed over 5 times better if you measure the actual percentage from its low to its high during this cycle thus far. Now what's different about this cycle is the RSI in the monthly time frame created a new all-time low price and we're bottoming back here. We've gotten a retracement up to this level again, and we're currently very close to that midline at the 50 line. I'll be so much more excited when I see this RSI starting to climb and peaking into this level into overbought territory passing 70. Because then we have a serious shot at an all-time high price on a higher time frame like the monthly with the RSI. Even if it pokes up to 70 and fakes us out, comes back, it still exploded later on. We can see exploding here, exploding here. So we have 3 cycles over the past 10 years showing this data on a much higher time frame. And I'm sticking around for this bear market no matter how much longer it lasts, whether it's 1 month, whether it's 6 months, whether it's another year, because this is the opportunity and I want to pay attention and try to accumulate as low as possible and have the lowest DCA and entries for a variety of assets, because I'd rather be accumulating a lot of projects I believe in at all-time low prices rather than waiting for Bitcoin to go to 40K or 50K and miss that first move or maybe that first 2 to 5x return for some projects, because the first moves actually make a huge difference in your actual ROI potential during a bull run. And as an investor in a largely unregulated and emerging asset class, I have to accept the risk and the reward. In looking at price action every day, I have to remind myself and accept that there can be crazy volatility, both good and bad, both up and down. Even if I want to go super heavy into certain projects, I never invest money that I actually need for the future. I only invest money that I can confidently set and forget and take that chance for that ROI. If I lost that money, it wouldn't completely crush my life or ruin my financial situation. I would be bummed out and potentially have a huge loss, but that is the risk I'm taking. In looking at the total market cap, this is excluding Bitcoin, so this is the market capitalization of all altcoins. So a lot of people are calling for Bitcoin to go to 10K or do a mega crash, and anything's possible, but I am not shorting my entire position. I am not selling 100% of my crypto bag, even if I believed in a worst case or black swan scenario to buy back lower, because I'm not taking that chance as an investor. Since the November 2021 high, we've been ranging here for almost 700 days. We've already gone through major sell-offs of 74, almost 75% here and here at a double or even triple bottom, and now we've just been in accumulation for hundreds of days. It'd be a different story if I just came out of a bull run and 2, 3, or even 10x my portfolio, and then I just wanted to sit in cash for 6 months or 2 years. That's a different story. But being this far into the bear market, I don't want to short my entire bag with any position. And if you do think there are lower targets, there's nothing wrong with, taking 10% of your bag or maybe even a lot riskier and do a higher percentage. But for any projects I believe in, I am not shorting the market by selling my entire bag to potentially buy back lower, because this far into a bear market, we're getting closer each day to even just recover and close some of these fair value gaps above for the altcoin market. And I'm only shorting a couple positions, or technically just sitting in cash with some of the bags that are in a very small profit, nothing crazy, just as that hedge in case we sweep the lows, I can actually buy back and improve that bag's position by maybe 10% or 20%, and that would be a big win before the future bull run. And just like this post from Moon Lambo Incredible Crypto, I completely agree. Prices on any crypto asset right now, a variety, dozens are sitting at new all-time low prices. They don't reflect fundamentals of these projects, they reflect a lack of liquidity. Looking at ADA, you can see the difference in crazy volume, much higher prices, and going multiple X's up versus today where the volume is basically sitting at a very low price during this bear market. And not financial advice, I believe the crypto asset class does reach trillions of dollars in market cap in the future and likely creates a new all-time high price with the future of tokenization, digitalization, regulation, etc. But just remember, there are huge opportunities potentially today in the market or in the future where there's small caps of 50 mil market caps, 10 million market caps that could reach multi-billion-dollar market caps in the future, just like we've seen over the past several cycles. Looking at the market cap of different DeFi protocols that absolutely took off, back in 2020, its market cap was $3 3 million, then it went up to 19 million, started climbing to 60 million, and to an all-time high over 5 billion, even $6 billion market cap plus. And that, for example, was over a 600x return. If the asset does a 600x move or even a 100x move and I'm getting a 10x within that, that's still a huge win. And the biggest thing for me as an XRP holder, knowing there will likely be future bull runs, is that XRP is one of the few digital assets in all of crypto that is not a security. Having that type of legal clarity during a bull run could be a very big deal. We have shared by Crypto Eddie, so we covered yesterday Ripple received their Singapore payments license. In other organizations like Sygnum Bank, I believe they have an exchange-traded product for XRP specifically as well, also received an 8-figure US dollar investment from SBI Group and has over $3 billion in AUM. So institutional clients can invest in a range of leading crypto projects including Bitcoin, Ethereum, XRP, Matic, and more. And this is just the start. I'm hoping a lot more organizations, major payment institutions, and banks can actually offer these types of solutions. And Crypto Eddie shares 15 companies now hold the coveted MPI license for digital tokens in Singapore. And this is a big deal. This is awarded by the actual Central Bank of Singapore, the monetary authority. So we have Circle, we have Coinbase, you have FOMOPay, we have Sygnum again, we have Revolut, we have Ripple the company, Blockchain.com, and a lot of large organizations. So prices are boring. There's no volume in this market. This bear market has been the hardest bear market I've ever encountered, but I'm going to be sticking around. We're seeing developments. We're actually seeing progress in other countries besides the US progressing legal frameworks for this asset class. I know it's hard to believe or even keep hope for a future bull run in this bear market, but I do believe it's coming. Big thanks to all that hit the like button, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.